I think there will be a total revaluation, a permanent revaluation of gold and the way we look at gold as money. There's always been money for now. I think silver will go up by multiples because there's such a shortage of silver in the world, and it's used both industrially and for investment purposes. So it's going to be much more volatile, but for investors to own some silver, whatever short-term manipulation that the Fed is trying to do, pushed by Trump to lower the rate by a quarter of a point, there could be another rate reduction. But the long-term trend is up, and we're going to see rates at least to the level that I saw in the 1970s.
Gold hasn't been climbing a mountain. It's fiat money that's been sliding down one. Egon von Greyerz, founder and chairman of von Greyerz AG, says what looks like a rising gold price is actually the dollar, the euro, He believes we've entered the acceleration phase, and in that environment, gold and silver are once again being recognized as true stores of value. Von Greyerz warns that at some point there will have to be a major revaluation of gold itself. The math simply doesn't hold when trillions of paper claims exist against such a limited supply of real metal. He suggests that revaluation won't just be a market-driven event but part of a broader monetary reset. Silver, in his view, carries even greater upside. Unlike gold, it's both an industrial metal and a monetary metal. That dual demand makes it more volatile, but it also means the gains in bull cycles are often far bigger. Some analysts now recommend holding as much as 30% of one's precious metals allocation in silver to capture that potential. Right now, gold exposure across the world's financial assets sits at a mere 0.5%, an all-time low historically. Von Greyerz sees that number changing quickly as institutions that once dismissed gold begin shifting into it. When even a small percentage of global capital starts chasing limited supply, the repricing could be dramatic. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
To me, it was very clear that we are going to see the end of this monetary era. That gold going up is not really what we should look at. What people should look at is instead the value of money going down, and that's so it's not gold just goes sideways. Gold is permanent or constant purchasing power. So to me it was quite easy, especially since I've been through a long life in business and in banking and investment, and I thought now this was the time for wealth preservation. And of course it's been a great journey since then. So we have seen gold since we entered that $300 going up almost 13 times in dollars, for example, and more in other currencies. But again, as I said, it's not really gold going up, it's the value of the money in your pocket, investors' money going down, and people don't realize that. They think that prices are going up. No, prices are not going up. It's of course, the effect of money going down in value is that prices are going up, but it's actually the pound or the kroner or the dollar in your pocket that's going down. And then, since we started, we've had almost 25 years of bear market in the value of currencies. That's the only way people should look at it. They should not look at it as if inflation is actually increasing the prices, but it's the money that is going down. And of course, I thought that 2008 would be the end of this monetary era, but they managed to save it, for another now. So what is it? 17 years right now. But I think now we are getting to the acceleration phase of the decline of the currencies or paper money, fiat money. And that's why all of a sudden the world has actually started to discover gold and silver also as not just a medium of exchange or a derelict asset, but actually as the real value and something that throughout history has kept its value. It's actually, we call it nature's money. It's the only money that has actually maintained its value. And now we are in 2025 at, only still just over 0.5% of world financial assets are in gold, 0.5% only, which is quite amazing, and that's historically very low. That's going to change dramatically now. And now you maybe have seen that, for example, Morgan Stanley, which is one of the biggest asset managers in the world, has recommended, their CIO, Chief Investment Officer, has recommended 20% in gold. That is incredible. No one has ever recommended gold from any bank or institution or asset manager. And now we're talking about up to 20%. I think silver will go up by multiples because there's such a shortage of silver in the world, and it's used both industrially and for investment purposes. So it's going to be much more volatile, but for investors to own some silver also, we are recommending up now to 30% of the total holdings of precious metals, which is higher than we've ever recommended. But it's because now what's likely to happen is silver, as I said, going up a lot faster than gold. But people have to remember that the corrections are also going to be faster. So you don't sleep as well at night with silver, but in the end, it's going to be a very profitable way of preserving wealth and enhancing wealth. We are now going to see a precious metals market. It's going to go up very, very fast. But in between that, there'll be vicious corrections when everybody will say it's finished. But it won't be finished. Whatever corrections we're going to see in the next few years are going to be just corrections of the main trend, which will continue up for a very long time. I think there will be a total revaluation, a permanent revaluation of gold and the way we look at gold as money. There's always been money for now. Let's say the paper money era. Let's say this is started in 1971 when the gold backing of the dollar was taken away by Nixon. So now we've been in the paper money era. But paper money, always reaches its intrinsic value, as Voltaire said, of zero. And so that's what we are seeing. Is paper money is down 99% since 71, and it's going to go down. The last percent, which is the last 1% is going to go down, which is 100% from here, of course. And that's what we are witnessing right now, the acceleration of that trend. So this is why I come back again to investors. I know Norwegian investors have never understood gold because their central bank got rid of all the gold quite some time ago. And no investment manager has ever, for the last, I don't know how many years, 20, 30, 40, 50 years, maybe not, almost that long, recommended gold because they can't churn commission on gold. They prefer to buy and sell stocks. It's irresponsible for the client, especially for the wealthier client, because the wealthier client, their purpose is to preserve generational wealth. You don't do that by trading in and out of stocks, bonds, equities, derivatives, private equity, etc. All of that will end very sadly, but the investors haven't understood that yet. And I'm not a gold bug. I'm just someone who tries to understand risk. That I've done that in my banking life, my corporate life, and in my investment life. You protect the downside, and the upside will take care of itself. And that's what gold has done for the last 25 years, and will continue to do for a long time. Since, as I repeat, all other assets, virtually all bubble assets, especially stocks, bonds, property, etc., they will decline dramatically against gold. So it's very simple, and people can just buy the gold and some silver, because silver has a tremendous potential now, and put it aside sleep well at night. You don't need to look at the price very often. It's gonna, it's not a 1 day investment or a 1 month or 3 months. It's a 5, 10, 20-year investment, or longer. As a matter of fact, I think after this era and there will be panic in this era, and as I said, gold will be permanently revalued because so people will see that as a major part of any portfolio, as Morgan Stanley recommended. And I think in the future, whether it's 20% that investors will hold or whether it's 10%, but I'm sure that in the future, every portfolio manager will consider gold as an asset that they need to keep at the bottom of their wealth pyramid, whether, as I said, it's 20% or whether it's more or less, but nobody is going to be able to create an investment portfolio without holding a considerable amount of physical gold, and as we are doing, and as your clients are doing outside the banking system.
Egon von Greyerz says the balance of global power is tilting eastward. China, India, Russia, and other nations in the global south are no longer minor players. They're becoming the core of a new economic and geopolitical order. Russia alone sits on natural resources worth more than $80 trillion. Instead of being weakened by Western sanctions, countries like Russia, China, Iran, and North Korea have drawn closer together, building alliances that now serve as a counterweight to the US and Europe. Meanwhile, the West is weighed down by debt, political dysfunction, and eroding domestic strength. Von Greyerz points out a crucial difference. The East still understands gold. While the West largely treats it as a relic, these rising powers are accumulating reserves, often far beyond what they officially disclose. The turning point came in 2022 when the US and its allies froze Russia's dollar assets. That action sent a message to central banks everywhere. Their reserves in dollars were no longer safe. Since then, they've been buying gold at record levels. This transformation won't be immediate. New York and London still hold power, but their systems rely on leverage and debt. The future, von Greyerz says, will rest on tangible value, commodities, production, and gold. Let's get back to the interview.
There are many people who talk about gold being revalued by the US to $20,000. I don't believe this. The US is losing its financial and economic power totally. They're massively indebted. The dollar is declining. It's going to continue to decline. And when not in a straight line, nothing does. But with that economy and that amount of debt, the power is shifting, and we've been saying this for many years. Is shifting from west to east. Is shifting to Asia, to southern countries. It's shifting to the BRICS countries. And the powerful nations in the coming, I don't know how long, at least 50, 100 years, will be China, India, a lot of Asian countries, and Russia. Of course, nobody likes Russia today in the West, but remember, Russia has about $85 trillion of natural resources. They are extremely powerful, and no countries can be sanctioned forever or be at war forever. So and what has happened, of course, is also that Europe and the US has driven Russia, China, North Korea, Iran together as a very strong entity. And this has been happening gradually, but seeing them meeting in China recently and holding hands, this was a real sign to Trump and to the US and to the European leaders who are all very weak and just want to make war to be important, although they have no chance in any war from the point of view of weapons or money. Or even armies, but they still want to. They have problems at home, and then that's when you start a war. So, but the Eastern countries or the BRICS countries, they are going to be so much more powerful than the Western countries, which are all in decline, and therefore this is where the future lies, and they understand the importance of gold. I mean, they all hold a lot of gold. Some of their trading or trade between countries, etc., will be settled in gold in the future. The balances will be settled in gold, and of course, when we talk about now central banks buying gold more than ever, this is of course started, as you indicated. This started with the sanctions by the US and Europe of Russia, and the confiscation or freezing of the Russian dollar assets. No one's going to put any assets, especially not central banks, reserve assets into dollars anymore because they're at risk. So everybody's gradually shifting their dollar investments to gold. It's going to take time because they are not going to rush it and drive the price too fast up. But it's happening, and it's happening day by day. And on top of that, now for the first time, we're seeing major investment banks or investment managers recommending gold at a very high level. And that of course a whole investment community will follow. I mean, they're all lemmings, that nobody, you should buy an asset when it's underpriced, undervalued, and unloved, but still has real value. And this is of course what we did in the beginning of the 2000s when we bought gold in a major way at $300. So people will ask now, is it too late? A lot of people have been waiting. There'll be a correction. Everybody's waiting for the 2008 correction. It won't happen. It's not the same today. Today, there is a fundamental shift away from the West to the East, to countries who understand gold and the importance of gold, and who hold gold to a much greater extent than the US. US probably doesn't have anywhere near the 8,000 tons, whilst China, Russia, and many of these countries probably have a lot more gold than they are officially declaring. So this is where the power is going. And as I said, the investment community will follow the money. It has always followed the money. And the money goes, the center of money is now moving to the east. It's not going to happen overnight. Of course, the New York and London, etc., are still powerful, but they've built up an empire on debt, and the future world economy will be based on commodities, real values, and proper trading, not on funny money and on derivatives and massive leverage, etc. So that's they'll be good for the world and bad for the West. The West is in a decline, which will, as I said, all empires when they die. I mean, it takes a long time to die. They started already a long time ago, but it will continue whilst the sun in the east is rising gradually but strongly. Poland is one of the exception of the European countries buying gold. The others can't afford it. They only have debts, and they have problems servicing that debt, and they all have to increase the debt, and it's going to increase exponentially until they can't borrow anymore, and the bond market starts collapsing. But Poland, as I said, is an exception. But I'm talking about collapsing bond markets. I've always been clear that since 2021, when we saw the bottom of the interest rate market, the interest rates came down from 1980 at the peak, especially dollar rates, but the whole world the same, and bottomed around 2020. So it's been a slight increase in short-term rates in the US. I am of the very firm opinion that interest rates are going to go much higher for two main reasons. One, inflation is going to continue to increase because of, as I said, the continued money printing and deficits, and also the demand for money, for credit, is going to increase dramatically. And if demand is increasing, so will the cost of this debt. And nobody's going to be, and whatever short-term manipulation the Fed is trying to do, pushed by Trump, to lower the rate by a quarter of a point, there could be another rate reduction, but the long-term trend is up, and we are going to see rates at least to the level that I saw in the 1970s.
What's unfolding isn't a small adjustment in markets, but a generational pivot in how wealth, power, and security are defined. When paper promises lose credibility and entire regions re-anchor themselves to tangible value, the structure of the global system doesn't just bend, it fractures. The coming years may not be about watching prices tick higher, but about witnessing a wholesale repricing of trust itself, with gold and silver acting as the measuring sticks. Could the West adapt quickly enough to a world where credibility is tied less to debt and more to what can't be printed or frozen? Or will it watch influence slip toward nations already stockpiling the foundations of the next era? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.